Hello and welcome to this week's Australian Share Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I will be discussing 5 ways that you can get rich, and then I'll touch on the All Ordinaries Index and the Australian dollar. Now there are 5 ways that you can build your wealth and become rich. These range from being tight or very frugal with your money to borrowing to invest in business or investments. I will go through all 5 in no real order of importance. Now you may choose to do one or more of these at any time during your life. Number 1, getting into your own business. Now this is often considered the fastest way to get rich, and that's to start and build your own business. But it's also one with the highest amount of risk. Today young people get bombarded with books and videos on becoming the next millionaire from running an online business or building the next big app. Becoming successful at business is not as easy as they all make out. Running a business means you'll have to be willing to take risks, work hard, and at times be a bit lucky. 90% of businesses fail in the first few years, as often those with an entrepreneurial spurt of genius realise that it's not as simple as it seems. That said, being in business for yourself can be quite rewarding, not only financially, but in many other ways. Now, number 2, borrowing to invest. When building an investment portfolio, timing is a critical factor. You see, the rich do not follow the herd. Becoming rich through investment is acting opposite to what the majority do. The herd attempts to follow the rich, but get it wrong all of the time. The research that I have done is that those who are not rich tend to move their money into the market before the peak and out of it after the crash. They also borrow the most just before the peak as they try to get rich quick, only to find that they lose as the market falls away. The fastest way to make big money is to borrow it and put it in good investments. It just makes sense, as there is more to compound and the interest is tax deductible. Now the problem with borrowing to invest is that the majority want to make $1 million, but only have a few thousand to start with, and so they leverage or borrow way outside what they should, and so are taking extreme risk and they end up losing. Smart use of borrowing for investment is generally the quickest and surest way to gain wealth for those who are educated in how, but it can be a big downfall for those who don't. Number 3, property. Property is always part of a plan to create wealth, and most successful people will have one or more in their portfolio. Whilst you can't get rich quick with property, it's great for long-term wealth creation. Now the rules for buying residential property really don't change, and they are close to the city or a major hub, close to public transport and close to schools. Number 4, the share market. One of my catch cries is that becoming rich through the share market is not about how much money you make on any one investment, it's how much you do not lose. If you lose 50%, then you need to make 100% to get back to where you started. If you lose 10%, then you only need to make back 11% to break even. The challenge is that so many attempt to get rich trading high risk or highly leveraged, only to find out that they get the opposite of what they were attempting. Where those who are successful long term are patient and open to opportunities as they present themselves. Interestingly, those who have the knowledge and experience to trade in high-risk markets generally don't, and those who don't have the knowledge and experience generally do. The stock market is a great wealth creation vehicle, as it can give you cash flow to place into other wealth creation vehicles such as property and your own business. Now number 5 is budgeting and tax. Let's face it, the rich don't generally pay much tax, and so proper tax planning can be crucial to your wealth creation, and getting good advice on this area is better done earlier than later. This brings us to budgeting, and in my experience, those who are not rich don't do it, and those who are do. Rich people don't overpay, but they do understand value. Those who are broke know the price and have very little idea of value. Wealthy people know that every dollar saved and invested today will be worth more later on. Remember, Buffett once said, someone is sitting under a tree today because someone else planted it a long time ago. Set a budget and follow the laws of wealth creation. And this means pay yourself first by setting aside 10% of your wage to put towards your wealth creation. So what do we expect in the market? Well, the global sell-off in equities spilled into the Australian market last week, with the market closing down strongly at 5,929 points on Friday. While the All Ordinaries Index rose on Tuesday as buyers returned to buy shares at lower prices. It continued back below 5,900 points later in the week. Now, it was interesting to observe that the rate of decline this week was substantially less than what occurred in the previous week, indicating that much of the selling may have exhausted itself. That said, we may see further short-term downside on our market as it pulls back towards a strong support zone between 5,700 and 5,850 points. Now, the current move indicates the market may settle slightly lower between 5,800 and 5,900 points over the coming months. This may also be the 2-year low on our market. What's exciting is that the best opportunities typically present following the confirmation of this. Now let's get into the charts. Okay, looking at the screen right now, we've got a monthly bar chart of the All Ordinaries Index, and you can see there that the current month is opening on its high, which is 6117.30, and so far last month, or March now, because we're now into early April, it closed at 5,868 points, or a range of 268.8 points. So it's quite a long range. Interestingly, as I said, it did open on its high and closed on its low, which suggests the market is still a little bit more bearish, so we could see some more downside. If it does, I gave you some levels of support on the report already, and they're the more closer term levels of support, but should it get a bit more momentum moving down, then you can see 4555, which is a 25% retracement of the range from its low in 2009. So I've anchored this down in that March 2009 low of 3,052 right up to the recent high here back from January 625650 points. So that's the monthly chart. If we go down onto the weekly chart, let's just bring that up. You can see a bit of a shorter term range here, 38.2% retracement of the range from, there we go, so February 2016 at 4762 to that high of 6256. Would see the market come down to 5685 points. But right now, interestingly, here's the interesting point here. It's broken below that low of 5887 from February. And it's suggesting it's going a little bit further down. Last week was a little bit more bearish. For me, I think we're going to see a little bit more downside, as I said on the report a little bit earlier. It could find some support between where it is now and this 5685 points. Right now, it's still a little bit too early. Please don't jump into stocks because they're cheap. And if you watch my report, I think it was last week, I was mentioning it all too often when the market's heading south. People jump in trying to catch falling knives, thinking they're buying a bargain because the stock's fallen to 5, 10, 15%, and they're jumping in on stocks. Way too early to do that. Only buy stocks that are rising in price. Don't buy them as they're falling, because when you start buying them as they're falling, they are more probability of continuing to fall. What you need to assume is what it has been doing is what it will do until it doesn't. Let's have a quick look at the Australian dollar, because that's also been in the news lately. Here's a weekly chart of the Australian dollar, and what I want you to see here is obviously this trend line up underneath here, and it's coming back to that, and I'll just expand that up a little bit so you can have a bit of a look here. And you can see here how the current week here is a little bit more indecisive. You can see here that it opened up at 76.9 cents. It closed at 76.82. So it wasn't a very, very big movement last week on the Australian dollar. So it doesn't have a lot of volatility behind it, and it doesn't have a lot of momentum behind it. That said, it could still fall away in the coming week. I want to share with you some other stuff on the Aussie dollar just before I finish this report, and I'll just bring that up a little bit so you can see a little bit more history of here. If we go and have a look at this, you see here, if I just bring a bit further around so you can see it, the move between this low here in which is October 2011 to January 2014, you see how that took 120 weeks. If I now look at the next one, that from that low in January 2014 through to January 2016, or the most recent low, which was at around 68 cents there. You see how that took 103 weeks. Now the current move, if I bring on the current move, you'll see here that we're 113 weeks from that low back in January 2016 to current week that we've got here. So right now we're in that point for a possible low on the Australian dollar against the US dollar. So to me, I'm thinking if it does do a little bit more downside, it's going to be over pretty quickly over in the next few weeks, and then it'll start to move up again. So if you're looking at traveling overseas and you're needing US dollars, I think I'd hang on just a little bit longer. As I said, it may come down a little bit further, but it should start to go up. And when it does start to go up, it's highly likely to break above. Let me just expand this up here. It's highly likely to break above that February 2008 high, back up around that 81 cents if it does do that. So as I said, if you are traveling, just hang on a little bit. That's it for the charts this week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.